From the couch, I wanted to shoot this video for my finance viewers. This is not a real estate video, so if you only tune in for real estate videos, this video may not be for you. But this video is for all of my investment clients or my viewers that like to look at investments. I have been working on a trading platform that I'm getting ready to launch. It probably won't be done anytime this year. It probably will be first quarter of next year. But what I wanted to do with this particular video is I wanted to quickly point out to you what I'm seeing and just caution you a little bit about where the market currently is at, and what things are risks for it. There's so much data set, and I'm looking at the screen up here as well too as the market's going across and everything. We are in a little bit of a correction mode. I don't know what the final correction totals will be. We've had a very good run all this year, 18%, 19%, 20% runs in many of the indexes. And the reason that we've had that run is because of some legislation that Washington passed, which was actually very stimulative. And it was more or less a stealth stimulation that was there. A lot of people didn't see it as stimulation to the economy, and that's why we had a really, really good first of the year. There was a lot of government spending. But with everything with government spending, we also run some risks because we're printing a hell of a lot of money when we're government spending. And that is inflationary, to say the least. But inflation had been coming down somewhat because they are always tweaking the mathematical model with inflation. And they're always taking inflationary things out of it, like groceries, for instance, is no longer even calculated into the inflation calculation. Go figure. It's the largest expense that any human being has is their groceries every single freaking week, yet they've taken that out of the equation. Does it make any sense to you? No. That's why we scratch our heads saying, wait a second, inflation is going down. How come I'm spending $150 a week for one person, $300 a week for two people at the grocery store? Now, we're not spending that much, but it is pretty substantial. It's a lot more than what it's ever been. I don't know how you guys are doing it. I worry about that as well, too. We're spending more on interest for our mortgages when those renewals are going to be coming due. That's going to be causing some problems as well too. So there's lots of different inflationary things going on. Now, the other thing is that spending is way out of control. In the United States, spending is going, or the deficit is now, the interest on the deficit is now over $1 trillion a year. A massive sum just to pay the interest. Could you imagine if your mortgage payment was $1 trillion just in interest alone? You'd have to be working 75 jobs. So at the end of the day, debt will crush everything. That's why I've been working so hard to stay as debt-free as humanly possible. And so this toll, this bell, will have to ring at some point in time. We keep pushing it down the road. The 2008 financial crisis, the printing press came up and print, get us out of this. And that's been government's solution to all of these economic malaises that we've had since 2008, basically, is, let's print more money. Let's print more money. Let's spend more. Let's spend more. We'll get out of this. Well, you cannot spend your way to success. You can invest your way to success. You can buy assets that are producing assets that will produce more than what you paid for them, but governments don't do that. They can't do that for some reason. I don't know why. But at the end of the day, the challenge becomes we are in a very top-heavy market that is priced to perfection, and perfection is slipping. We're seeing every day that more and more information is coming out, and what's standing in our way is the college loan stuff will have to start being paid. Starting in September, October, people are going to have to start paying their college loans. For the most part, Joe Biden's trying to not have that happen because he realizes how that's going to crush his economy and how he's not going to be able to get reelected once that starts to happen, because that was also part of this stealth financial stuff. Also, in California, the largest economy in the United States, there was because of all the floods and the snowstorms and everything, there was a moratorium on paying taxes. You didn't have to pay your taxes for April 15th like every other human being had to. You could defer it, and now those deferrals are coming due. So again, that is just a great big sucking sound of money coming out of the economy that has to go to the Federal Reserve or to the government so that it can spend money in Agujabanchichi, wherever that is in the globe. And so at the end of the day, this bell is going to be tolling at some points in time, and we're getting to those points data set wise, the data sets that I watch in the spreadsheet that I run. It is kind of high tide to be cautious. The concept that you can put some money into a 5% GIC is kind of a nice place to be right now, because the risks are harder right now. And that's why you're seeing the bond sales today were actually pretty strong. They did really well. The government sold $38 billion, I think it was, of 10-year notes today at a 3.99% rate. So people were happy to take a risk-free rate of 4%, basically, rounded up. And if you can get a 5% rate on a GIC and have the return of that money when you need it, that's also important, is not necessarily a bad place to be. However, inflation is soaring. And the cost of a barrel of oil is now closing in on very rapidly $85 a barrel. It was just $80 a barrel, and now it's closing in on $85. And the reason for that is that there's no oil above ground. There's none. The Saudis have turned down their spigots. We're not producing as much oil. The Russians are only supposed to be selling their oil at $60 a barrel, but they're selling it for $68 now. So the impact that Joe Biden tried to have on the Russians for this whole Ukrainian war is not working. It's failing miserably. The Russians are selling their oil to India for $68 a barrel. And that's $8 more a barrel than what they're supposed to be able to sell it for, based upon sanctions and all of these things. So all of that is all out of control as well, too. The cost of food and the scarcity of food. Tyson Foods just announced their quarterly results, and they only made 17 cents a share, 15 cents a share, massively lower than what they've ever done. And they announced that they're going to be shutting 4 plants, and more people are going to be losing their jobs. Yellow Corp just announced, we're done, we're belly up, there's 30,000 people out on the street. So these numbers, these newest things, have not been accounted for yet at the government. Of course, when they're going to release their data, it'll all be skewed to their thought process rather than what the reality actually is, but that's okay. It just is what it is. But there's a lot of different things. Amazon is in the process of right-sizing its business units. Disney it just announced that it's using an AI system to figure out in its business units what it no longer needs, and is going to be getting rid of all of those people too, because when you get rid of a business unit, you're getting rid of people. Bud Light or Anheuser-Busch, they just announced that they're selling breweries because they cannot give beer away any longer because of their own kind of marketing stuff that they did earlier this year. Without even going into any opinion on any of that, the opinion shows up in the economics. And so at the end of the day, there's a lot of different things that are going on from a data set point of view, that we could be at an inflection point. We could be working our way lower. The market is slowly working its way lower. It is. The level to look for in the S&P 500, because that's really what I watch. I don't watch the Dow specifically or the NASDAQ specifically, but the S&P 500. If we look at the S&P 500, we can see a retracement to about 4304, rough 4303. So round it down, 4,300. We're sitting currently about 4,485. We have sold off some, but this could get more. And it's not a bad thing because we never really end a year with an 18% gain. And that's what we're sitting at so far this year. Look for the possibility of 8% being yanked away from that, and that you end the year with 10, which is still a great year. Still a great year. But we'll see. This could get a little bit out of hand. There's some different things going on. Office buildings, the bank, let's go there just quickly. Yesterday, Moody's came out and downgraded a whole bunch of banks. There's a massive reason for that. So what's going on that you don't know about is that buildings are vacant. I was just in Toronto and you could see through buildings. I'm like, boy, this is weird. You can see right through these buildings. Well, there's nobody in them. That's why you can see right through them. The businesses have left. They've taken down the walls. They've gotten the floor back to where it was when they first came in, which was part of their requirement for their lease. So you can see all the way through these buildings at night. Gee, there's nobody there. Okay, great. But the problem is that building is not producing any longer then. It cost massive amounts of money to build the darn thing, and they need it occupied to be able to pay the mortgages on it. Because there's probably multiple mortgages on it. And those mortgages are financed by the smaller tiered banks or the mid-tier banks, not the massive banks. The massive banks don't do that business. It's mid-tier banking that does that business, and smaller banks that do that business in smaller towns. The challenge with that is that, like in Philadelphia, for instance, the challenge is that there's several buildings. There was one that was on the books for worth $64 million, and it sold for $24 million. So then the bank that had the note has to take a $40 million loss someplace. They have to take it because the building sold. It has to come off of their books. So the toll is now dinging for this $40 million loss. And there was just another building in Baltimore that did the same thing. So now all of the buildings in Baltimore all need to be reappraised lower than what they're on the bank's books for. The other thing that happens with all of this is that as the buildings are revalued at a lower valuation, their tax basis also goes down. So then the problem becomes that the city of Baltimore, for instance, in this example, gets less revenue next year because the valuations of the buildings will be reevaluated lower. So there's a lower tax basis for that building then too. So not only is there less tax revenue because there's less people going to work in the downtown core, the businesses are failing in the downtown core, so they're not paying any taxes either because they're closing. And then these buildings are being reevaluated lower as well too. So then the city has so much less money available to it, which means that it has to start cutting its services all across the channel. Now, we also have open borders in the United States. So we now have all of these immigrants coming in who have no place to stay, have no sums of money to be able to do anything with, and are dependent upon these social programs in this country. And they're bleeding this country dry because of the massive sums of people that are coming in and the massive need. It's not being controlled by the government at all. And now we have more local governments that are now suddenly in crisis mode because they're running dry of money. And they can't print money. The only way that they can print money is to raise taxes. And in many of these cities, the taxes are very high already. Even here in Windsor, we have the highest electric rates and we have some of the highest property taxes in all of Canada. We just do. So there's less places for the city of Windsor to come at trying to gain some tax revenue. And because these businesses are failing and pulling out and moving other places, and because the richer people are getting upset with all of the crime and are realizing I have to move someplace to a safer place because this crime is getting out of hand and I don't want to be killed. I want to survive. So the human condition means that I have to leave. I have to go someplace safer for me, and I have to take my business with me. So as all of this talent leaves these cities as well too, the crime and all of that will just get that much worse. And as the cities have less and less money to spend on policing and other social programs, then suddenly there won't be any money left available for that either, and it will become that much worse. So when Moody's came out and downgraded the banks, that's what they were seeing. They're seeing this and they're saying, look, all across the United States, there's been buildings that have been selling for massively less. And we have to, as a rating agency, we have to stand up and put a voice to this and say, we're going to have to change your rating. Because where did this $40 million go? How does a bank make back $40 million? It takes a long time to make back $40 million. And so Moody's has come in and said to all the banks, look, we're going to downgrade you because we have to. And that's what also Fitch did to the U.S. rating. Look, the concept that the deficit is increasing by over $5.2 billion a day from the spending at the government level, that we need to downgrade the debt of the United States of America because this runs out at some point in time. And so, yeah, they downgraded the debt of the United States of America. It just means that the United States is having to pay more for its debt. It took the 10-year notes out today and sold them at 4%. Meaning that $38 billion, the new rate for that loan, that mortgage, if you will, is 4%. It's a hell of a lot of money. 4% on $38 billion is a lot of money for the next 10 years. Now, luckily, they've been able to lock in their rate at 4% for the next 10 years, which is good from a planning perspective. But look for the 10-year note to end up moving up to 5%. And look for the deficit to continue to keep increasing. It's currently $33 billion, I think it is. But look at that to continue, or $33 trillion. Sorry, it's even bigger than you and I can even imagine. But that number is rapidly increasing as well, too, as governments around the globe are just spending. And at some point in time, this has to end. I don't know that it's right now that it's going to end up coming to an end, but at some point in your and my lifetime, we will have to pay this piper. Right now, we're just starting to feel a little bit of it. We're starting to feel a little bit of all of this. And some of the programs that were supposedly helping in this stealth environment of stimulation are coming to an end. College loans are going to have to start being paid. Cruise ships are starting to admit, yeah, we're having a hard time selling rooms. Airlines are starting to admit, yeah, less people are starting to fly now. As more and more of this college loan stuff, all of the housing stuff has now come to an end. You have to start paying your rent now. And all of this is now coming to an end, and the free money is coming out of the system. And that's what we're starting to see in the stock market. Does it bleed over? Don't know yet. way too soon to tell you that. But that's what I'm starting to see. The concept that oil is now $83.59 a barrel for September, up from $80 about 5 or 6 days ago, is exceptionally inflationary as well too. You're seeing that here at the pump. We're paying $1.70 a liter here in the city of Windsor. A liter. So if you did the math, if you were in the United States watching this video, you understand how much money Canadians are paying. But understand too that I think it's 14 cents of it right now is green energy tax, which is a massive sum of money that the government is collecting off of that tax. It's massive. And yet they're still running out of money. Doesn't make any sense, does it? They're spending way too much. They must stop spending. That's why maybe the Ukraine war needs to come to an end. The government just doesn't have any money for a war. We just don't have that capacity any longer. The bell is tolling very, very loudly. So just wanted to kind of put that caution to you right now. NASDAQ is only down 0.64 today, 13,795. Oil is moved up another 6 cents since I've been watching it as well too. I believe that oil is going to $85. I believe that oil by the end of the year is $100 a barrel. And the economic impact on that is severe. If the 10-year note gets to 4.25%, right now it's trading about 4%. If it gets to 4.25%, that is kind of a market death cross, if you will, which starts to really desperately impact the stock market. We may get there. Don't know. The Federal Reserve has come out and said, where we said that we were done with rate cuts or rate rises, we may not be done yet. Because they feel that the economy is soaring because of unemployment numbers that the government keeps releasing. Yet maybe we're going to start seeing some of those numbers because now suddenly Amazon is cutting, Yellow going bankrupt. Maybe we start to see some changes in some of those numbers so that the government may come back in and not raise. And that's what everybody's kind of banking on as well, too, from a positive perspective. We'll have to see. We have to just kind of sit here and wait and see what the shoes to drop are from the banking crisis. It is a crisis now. Nobody's reporting it as of yet, but there's more shoes to drop there. As far as interest rates go, is it a good time to be able to buy a house in the city of Windsor? What's going on in the city of Windsor? Everything's great here. The battery plant is they're starting to hire for the battery plants as well too. We have no industrial land here left anymore, or no industrial buildings left available here anymore. They've all been bought, and all of the supplier plants are all getting started. They're coming in and they're doing their tooling and they're setting up their shops to get ready for the battery plant. So the bridge is just about complete as well too. It's getting closer and closer and closer to connecting. When it opens, there will be all of those massive jobs as well too, with all of the processing at the border. Those are all really, really good government jobs. The city of Windsor, the university is just packed with students, from international students. All of the different things that I'm seeing channel check wise in the city of Windsor are still great. As I have always said, Windsor will be insulated from any economic downturn that we might have this year, simply because of all of the positive things and all the positive investments in the city of Windsor going into this time. And then the other side of that is that our housing, we still only have 720 supply, and that's not changing at all. Pricing points are staying pretty steady at an average of about $500,000, $510, $515, $520. They kind of go in that range. All of that is all good. It's all stable. None of that I'm seeing is anything weak at all. We're selling a few less houses every single week. Average selling price is still holding up. Average over is still holding up because we just don't have that much supply to be able to meet all the demand of everybody still moving here from everywhere else in Canada. And so all of that is still all good from the city of Windsor's perspective on housing, I believe. So that gives you a little bit more of an economic update at this point in time. I just worry a little bit about where the market actually physically is. I believe that we are more of a shorter, and I don't know that we drop underneath at this point. I don't know that we drop underneath 4,300 on the S&P. But the things that will get us there is a rising barrel of oil, and some kind of economic crisis from a banking perspective, and just generalized malaise. The concept that Microsoft is no longer in a growth mode, Apple is no longer in a growth mode, Tesla is no longer in a growth mode. All of that market, Meta is no longer in a growth mode. All of that market leadership has now failed or paused at the very, very least. We'll see whether we can restart that stuff for the future. We're just kind of in this pause right now here as we get into August. We'll see what happens as the traders come back from their holidays, as we get into September and October. September and October could be kind of difficult for markets, simply because September and October are always difficult for markets. So we'll see where we end up at here. Just watch out for that 4,300 on the S&P 500, and watch the 10-year note, and then watch the price of a barrel of oil. Those are the three things to kind of key in on, is how they will impact our market here. But thanks for watching. Just wanted to give you this update. Have a great day. Bye-bye.